The demand is holding fairly steady. We saw a little bit of a pop in the last few weeks. We know that to expect that the new supply is just going to get quieter and quieter until the new year. Perhaps the other phrase of the day is buyer's market in both Manhattan and Brooklyn. Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This is for the week of November 6th to the 12th, and we're going to get started as we always do with the luxury market. Then we're going to look at the Manhattan market and the Brooklyn market. I'm going to sum it all up, giving my thoughts and my takeaways. Last week, there were 20 contracts signed in the luxury market. 3 of those were for properties that were priced at $10 million and above. The rest were for properties that were priced at $4 million and above. 12 of those properties were uptown and 8 were downtown. Condos outsold co-ops 14-3. There was 1 condop and there were 2 townhouses in that group. The number 1 contract was 118 West 12th Street. It was asking just under $20 million. It was reduced from just under $30 million when it was listed in June of 2022. It went through 3 brokerage firms before it finally went into contract. This is a 24.5-foot wide house. It has 4 stories. It is 6,600 square feet. It includes 5 bedrooms, 3 bathrooms, and it has 2 powder rooms. It has a very deep landscaped yard and a terrace off the top floor. The house is in excellent condition, but one drawback, it does not have an elevator. The number 2 contract was Penthouse 17W at 135 East 79th Street. It was asking just under $20 million. It was listed in July. This condo duplex has 5,325 square feet. It includes 5 bedrooms, 5.5 bathrooms, and a library with a 269 square foot terrace. This unit is also in excellent condition. Amenities include a doorman, concierge, resident manager, fitness center with private training, and a yoga studio. It also has a club and billiards room. It has a lounge with a grand piano, fireplace, and a catering kitchen that open onto a landscaped English courtyard garden. The building also offers a bicycle room, and wine cellars are available for an extra fee. If we take a look at the stats for last week, we see that the total weekly asking price sales volume is $174,750,990. Average asking price $7,939,800. Median asking price $5,395,000. Average discount from original ask to last asking price, 9%. Average days on market, 614. That is it for the luxury market. We're going to move now, see what happened last week in Manhattan. Any questions? Please post those below. The supply last week in Manhattan was down a little bit, 1.1%, 274 for the week. Contracts signed 180. That is actually up a bit, 18%, a little more than that. And the off-market properties also rose 298 for the week, up a little over 39%. Again, as we're rounding the corner to the end of the fall season, there are some sellers who've decided they're going to take their properties off the market, perhaps till next spring. If we look at the monthly supply for Manhattan, we see 1,438 for the month. That is down overall, a little over 23% for the month. Contracts signed up, actually, about 16% for the month, 770. Still low for what we would like to be seeing, but it is nice to see the increase. Off-market properties, big jump there, up over 58%, 928 for the month. If we look at the liquid market pulse, we see we are in a buyer's market. We see that the liquidity is down. We see that this chart is trending downward. What is important to know for Manhattan is that we are in a low liquidity environment. We did see that little pop of contract activity, but we really do need to be seeing more contracts overall. If we look at the liquidity pace chart, this 30-day moving window, well, we see that moving up, this little pop overall. We are down for where we need to be. 770 represents the last 30 days of signed contracts, but overall, we should be saying that it is important to note we are in a low liquidity environment in this fall market. If we look at the data as we're starting to see this discount by price point, if we look at these different price points and understanding that we have lagging sales data, we are seeing that at least as of August, we're starting to see the slowdown impacting price action. It depends on your price point, of course. The under 1 million looking to be in August at about 4.5, over 4 million saw a much bigger discount, almost 9%. We don't know quite where we are at this moment in time in November, but good chance we are at least at these average discount numbers. Definitely something buyers want to be keeping in mind, and definitely something that sellers need to be keeping in mind when they're negotiating with buyers who are making offers. If we take a look at the new supply expectations, we know that to expect that the new supply is just going to get quieter and quieter until the new year. Okay, that's it for Manhattan. I'm going to get into the details a little bit more in my recommendations for people who are actively trying to buy and sell in this market when I wrap this up. But right now, we're going to take a look at what happened last week in Brooklyn. If you have any questions, of course, please post those below. Last week, we saw a little bit of a bump in supply, up 6%. 177 properties came on the market in Brooklyn. It was nice to see that little bump. Definitely needed this new supply. Contract activity for the week, 124, essentially flat. And we saw a little bit of a decline in the off-market properties for the week, 79. That's down almost 17%. If we look at the monthly supply for Brooklyn, 884, we see a bit of a decline, a little over 4%. Contract signed, a little bit of a bump there as well, almost 8%, 525. And the off-market properties, bit of a jump there, up over 49%, 433. Important to note here, as with Manhattan, Brooklyn is also in a buyer's market. We see the tail end of this curve kind of going down. Brooklyn is also in this low liquidity environment. We see 525 contracts signed over the last 30 days, showing that there's a little bit of an uptick. We've seen a little bit more activity particularly in Brooklyn, a little bit in Manhattan, essentially a little stronger performance in the signed contracts over the last couple of weeks in both Manhattan and Brooklyn. Manhattan's holding a little more, let's call it steady. Brooklyn seeing a little bit of a pop, not very much to write home about in either market. Essentially, both markets, low liquidity environment. If we look at the Brooklyn listing discounts by price range, we see the discounts are also starting to show some cracks here. If we look at the under 1 million, we're seeing less of a discount in Brooklyn than we are seeing in Manhattan, but we're definitely seeing discounts in both markets. Okay, that is it for Brooklyn. Any questions, please post those below. So now we're going to move on and give you my thoughts and takeaways. So we saw that the luxury market is still holding pretty strong for fewer contracts than the week before, 20 contracts signed in the luxury market for properties that are priced at 4 million and above, and 3 of those were at 10 million. Very encouraging to see that the luxury market is holding fairly steady as we move through the fall market. The phrase of the day for Manhattan and Brooklyn is low liquidity environment. Perhaps the other phrase of the day is buyer's market in both Manhattan and Brooklyn. We have likely seen the supply and new listings have peaked for the season. We're now kind of in seasonal decline. Don't be expecting to see a lot more inventory coming on the market until the spring. The demand is holding fairly steady. We saw a little bit of a pop in the last few weeks, especially in Brooklyn. Overall holding steady, likely though could have peaked for both Manhattan and Brooklyn. The price action, as I said, we do have lagging sales data, but median prices are coming in down from about 2% to over 9%, depending on the price. Essentially, you want to keep in mind that each situation is unique, and it is important to remember that if you're a buyer or a seller. Sellers, my recommendation to you in terms of making the most of these few weeks that we have left of the fall market, make sure that you are priced correctly. You will know, because if you are, you will have people making appointments and making offers. If you want to be a seller in this market and you are not getting offers and you are not getting a lot of showings and you can stand it, then you should be adjusting your price. Buyers, this is your market. You have less competition, you have pretty good leverage, and you should keep in mind that this is likely it for inventory until the spring. Word of caution, nothing lasts forever. So if you want to be a buyer in this market, you should definitely be making your move if you see something that you like. Okay, that is it for this week's look at the state of the New York City real estate market. As always, my thanks to Urban Digs and the Olshan Luxury Report. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news about what's happening in the New York City real estate market. In the meantime, take care.